So obviously we had a massive week last week regarding like the fundamental side of things, and we've got a huge week coming up. Now, one thing I'd recommend you guys doing, like if you don't do this, is just watch and listen to the Bloomberg Lives. Like this is something that is very, very important. I don't know if you guys was listening to what I was listening to, 5, 10 minutes ago, but like this gives you a lot of insight into the fundamental aspect, right? What's going to be going on from different perspectives, from a lot of like higher officials, a lot of bank analysts, and it's just good to just be in the groove of it, right? Because we understand that fundamentals is one of the most important things. A few things on my radar, which I did send in the chat if you guys haven't seen it, or the Zoom chat. But this is the first thing that's on my radar, right? That potentially we could be seeing a change in the Bank of Japan's monetary policy. So we know that recently, right? Obviously, Japan, well, I say recently, last few years, Japan, right, has had what we call negative interest rates, which has been devaluing the hell out of JPY. Meaning what? That pairs traded against JPY, so like UJ, AJ, NJ, etc., have been extremely bullish. So, for example, again, UJ, XXX, JPY pairs have been extremely bullish because of the negative interest rates. But if Japan comes in and ends this negative interest rate cycle, what do you think is going to happen? Well, let me know in the chat. Again, there's no right or wrong answers. We're all, it's okay. Let me know what you think. If they change the monetary policy and start raising rates, how will that affect Japanese yen futures? To the moon, of course, right? No. Well, it depends what. Okay. Specifically Japanese yen futures, not XXX JPY pairs, right? Specifically Japanese yen futures. Yeah, of course, it would rally. Meaning that like pairs like USD JPY, NZD JPY, AUD JPY, Euro JPY would be going lower, right? Yeah, there we go. You got it. You got it, Nathan. So this is very, very, very interesting in terms of like the next Japanese yen. Bank of Japan is going to be on Tuesday, March 19th. So next week, that's going to be very interesting. Definitely pay attention to that, because that's probably going to give us exactly clarity of what they're doing with the rate. Right now, it looks like markets have been starting to price in that. But it's so basically just keep the lookout to if you hear like in that press conference, they're like, all right, we're raising rates, and they give you a date and they actually start doing it, get ready to sell USD JPY, sell Euro JPY, sell NJ, sell AJ. Like anything pairs against the yen is going to just fall out of the sky because futures for Japanese yen will increase. So that's the first thing, right? I'll send this article here. Definitely give this a read if you haven't. Very, very, very important. Next article over here, right, is what is going on with obviously inflation, right? If you guys pay attention to last week, what did Powell say? Let me hide this, right? So I don't want to give you guys the answers. What was Powell saying last week? Who listened to the conference? What was Powell saying last week? Let's see. See if you guys were doing your homework. All right, and if you didn't know, again, guys, make sure anytime you see FOMC meetings, anytime you see Powell, anytime you see these central bankers speaking, it is your job, it is your duty to go in and listen to it, and it is your duty to actually decipher that information. As traders, like if it was easy as just going to a chart and drawing a technical line, then bro, like every single person in the world would be profitable. Remember, you've got to spend time doing your due diligence. Wants more data to confirm before he gets rates cuts. Yeah, but of course, the most thing, like the main, yeah, you're right? But the main theme I was picking up on, like you're basically getting closer to saying that this year rates are going to be lowered. If you heard, what her name is, Jill, she was talking about basically what Powell was saying. Like as long as we keep seeing this trend that inflation's on, and we're seeing inflation continue to go lower, we could see rate cuts this year, right? And if we see, right, and to be honest, like if you just even look at like from a fundamental standpoint of all the US dollar information, we've been seeing a lot of softening, right? Everything's just being softened. We're seeing unemployment rate increase. Less people have jobs, right? We saw inflation obviously downtick. You couple that with a technical standpoint, right, on the DXY, that we're seeing, okay, all the news softened, which has given us a dovish tone. Remember, soften, dovish is basically bearish, right? Now, you couple that in with, obviously, we've got CPI data coming out tomorrow, right? Obviously, I can't predict what's happening with CPI tomorrow, but as long as CPI comes out realistically at 3.1 or lower, I'm going to be very bearish on the DXY. Now, even if we do get some short spikes, because again, like you can sometimes see that month over month, like increase, like we saw on the last CPI data up here, right? What happened on the last CPI data? Year over year, we saw the decrease, but month over month, we saw the increase. So what happened was basically we got a fat UTAD that enticed everyone bullish, but we knew, all right, well, this is an active distribution anyway. All right, why was this an active distribution? Well, number one was premium in our leg, and number two was in phase B at that point. So we had our thrust, and obviously we then got our confirmation. But more importantly, what I like now, what we've done on the dollar, is we've broken our last reaccumulation, right? And so for me, this is very, very bearish signs. And even if we just get into a top-down analysis from the weekly, and I'm going to do a lot of top-downs today, just so you guys can see like everything from the weekly is down. But again, if we're looking at the weekly, man, like, we've come into supply back from 2000. Again, writings on the wall. What else is happening this year? What's happened at the end of 2024, family? Who knows? Who knows what's happened at the end of 2024?
Elections.
Yeah, that's it, right? Come on. So, Kish, you obviously you're unmuted. So, I'm going to put you on the hot seat here.
Oh, damn.
So,
Okay.
what's your perspective on the elections, and like what we've been seeing and what could happen and how that could affect the dollar?
So if essentially, if ideally we want Trump's party to come in, because that would give us more bearish dollar signs, right? Whereas
Yeah,
if it's Biden's, I get the names mixed up, but then if it's Biden's side, then that's not really good because that'll be more bullish dollar. So
yeah,
then for things
100%.
and things like that, it's not really going to be as good as it could be.
Yeah, 100%. So obviously, the presidential party now is a Democrat, and Democrats typically want a stronger dollar. They're, again, I don't want to get too political on here, but if like you can even backtest this, the different presidents in America and how it affects the US dollar. But if Trump goes back into office, which again, I'm not trying to predict this, but the way it's looking right now, just based on sentiment, what people are saying, like you don't have to live in the US to know that Joe Biden right now, like, is bro, the guy's like literally dying in front of us. Like, you watch one of his speeches, the guy can't even talk. He can't even walk up a set of stairs. And someone like that who's running the country, people don't want that in office. So someone like Trump coming back in, what's that going to do for the economy? Well, for the stock market, right? Obviously, Trump's a businessman, so he'll come in and start putting policies to basically weaken the dollar to obviously increase the value of his stocks, etc. So when you couple that now from, okay, we've got election year, we're seeing inflation on a massive downtrend. We've seen interest rates. And again, if you don't know what I'm talking about here with the economic cycle, just go to the channel and just type in like fundamentals. And there's a whole training on this specifically. If you can't find it, let me know and I'll send it to you. But we've obviously seen inflation on a massive, massive downtrend. Why has inflation been in such a downtrend? Because they had to raise rates to 5.5%. And because now obviously inflation's target is 2%. How do you know what inflation is? Again, just look here, all right, CPI year over year. We've seen that huge downtrend since they started raising rates. And right now we're sitting at 3.1%. This is why the rates haven't been raised. And if you even heard, I forget his name, but the Indian fella who was talking on Bloomberg earlier, who was it? I can't remember who it was now. But yeah, the Indian fella, he was also saying, like, again, why is dollar continuing to be bearish? Because the markets are pricing in that we're not going to see any more rate hikes. Remember, when interest rates are being risen, that makes this currency more attractive to investors. Because when your interest rates get like increased, you get like almost a guaranteed return on investment with the bond market. So if we know that, wait a minute, inflation's on a massive downtrend, and the only reason they raise rates is to lower inflation back to 2%, and inflation's now at 3.1%, getting very close to its targets, there's no need to raise rates anymore. So that's why we've been seeing interest rates stuck at 5.5% for the last few cycles. So when we see inflation come closer to 2%, and obviously they don't need it to be at 2% on the dot, but when they're a little bit more confident, which obviously Powell is doing another speech next week as well, which would be great to listen to as well. But when he does that speech, that obviously give us a little bit more clarity in terms of like when they're going to exactly lower the rates. But for me, again, like where we are from the election year standpoint, right? Bearish. Crypto halving, another bearish cycle for the dollar. From the fact that inflation is on a massive downtrend and interest rates are no longer increasing is another bearish sign. This is all showing us that we are switching to that risk on sentiment. And obviously, if we're risk on, that means money is going to be flowing out of the US dollar and into what? Stocks, cryptos, metals. That's why we've been seeing Bitcoin at $71,000. Gala at 8 cents a coin, boys. Fuck it hell. ICP went to like 16. It's fucking crazy. So we're full on risk on, right? So for me, when I've got built that fundamental narrative, and how I do that, again, just looking at past data, seeing how that's affected the markets, spending time reading these articles, spending time listening to these speeches, right? It helps me paint the picture of where we are and the overall cycle. So, excuse me, my mother's calling me. 1 second. Let me just text her back. Yeah, so it's all pointing that picture to a bearish sentiment, all right? Now, from there, I want to confirm it by looking at technicals. So when I go on a weekly time frame, monthly time frame, well, obviously you've got the markup now, but what have we been seeing, all right? Dollar is just on a huge downtrend. Huge downtrend. You know, we have our massive redistribution. How is it a redistribution? Well, from a basic standpoint, we've got manipulation of the highs, break to the downside. From a more advanced standpoint, we've got our accumulation, all right? This driven by sellers. Why is it driven by sellers? Because number one, it's not in a demand zone. Number two, it doesn't have all the validation criteria. And number three, what does it do? The accumulation just causes a spike to the upside, forms a distribution, and then this puny distribution invalidates all those buyers. So we have our huge redistribution over here. And obviously we've measured it out, right? It come into the 50. And we did start to see a distribution form, right? However, what I'm looking at where we are basically now, which we'll get into, is this is our UTAD essentially, all right? It's a massive distribution and it's tapped right into the 80%. So long term, like from a technical standpoint, I'm extremely bearish. And like I find it extremely convenient how as we come into the 80%, right? Literally, I can't remember who I was talking about this on a call the other day with. But as we come into, this is the price where we come into the 8%, this high here. How convenient, no, my bad. This one over here, where is it? This price point here is when we tap the 80%, right? How convenient when we tap the 80%, we start seeing inflation come on a downtrend, right? Let's go look at it. When did inflation start really dropping? Around September and August, right? September, August, that was the high of the dollar. Then we broke reaccumulations as inflation was obviously falling down, and we're pretty much on that bearish dollar. The only time we've been seeing the spikes is when inflation started to tick to the upside. So from a technical standpoint now, all right, I'm looking at this from like, okay, all right, where are we to the left in supply? All right, so I'm anticipating this to be a distribution. Again, let's go for our validations. Number one, all right, where are we? We're at 80% of a redistribution. Number two, all right, well, have we had our change of character and our trading range form? Definitely, right? We've seen a larger retracement and a trading range form. Number three, have we seen those 3 drives? 100%. We've seen multiple drives. 1 drive, 2 drive, 3 drives, 4 drives, 5 drives. All right, next step. Do we have a manipulation? Oh, we definitely have a manipulation. Now, obviously, to confirm this distribution, we do need to obviously sign a weakness. However, this is on a weekly time frame, and this distribution started forming in 2015. Like, I'm not going to wait for this break because I'm not going to wait 5 years to take a trade. Like, I'm patient, but I'm not 5 years patient. But so this is why, right? We know that inside this leg, if this is going to show the weakness, the market cycle inside of that leg, I'm just going to draw highs and lows and just assume the highs and lows are reaccums just for the sake of time. We know that they need to, these reaccumulations need to break to give permission for that leg to give the weakness, right? So when I'm looking at this leg, you can probably already start to see a baby market cycle inside of here. I want to see that market cycle break with the fundamentals showing me bearish signs, which we already spoke about that, right? And again, our market cycle, right, we've seen our reaccumulations, 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 reaccumulations. We've broke reaccumes and we broke reaccumes, right? So demand has been invalidated. And from there, right, we're pretty much in a bearish market cycle. You know, we've got, I mean, you could look at this as a massive ascending wedge type 4 distro if you want to. There is another little micro up in here as well. But yeah, and so now I'm looking at this to pretty much anticipate this is a bearish market cycle. You know, we came into the reload that broke our most recent larger reaccumulation. We distributed out of there after we swept all this liquidity. You can see we've gone into the accum, we've had the distro, and like with the fundamental showing us bearish signs, this is why I'm not looking to be buying out of it, right? Because the fundamentals are supporting this. Now, if we drop down to the hourly as well, what have we seen? We've seen more signs of buyers being invalidated, right? We've just broken our last reaccumulation. So we're pretty much bearish on majority of the time frames. So for me, going into this week, obviously we've got inflation data coming out tomorrow. Let's make sure we refresh this, double check the right day. Obviously, this is Thailand time, so just make sure you've got this in your respective time zone. But yeah, so as long as we see inflation year over year continue on its downtrend or stay the same, like I'm going to be bearish dollar. All right. Now, if this motherfucker starts upticking and this thing comes in at 3.23, anything above 3.1, yeah. Goodbye the shorts. We're probably going to see this thing rally. And that's where now, could that be a rally to bring us up into supply? It could be. And obviously, that's when it would now lead us to the FOMC speech. But if inflation does come out higher than previous, then we could probably see this thing go a lot higher. Where could it go higher to? Well, let's look left into our supply. Well, obviously, our first supply zone is this distribution, which I'll be looking at. And then I'll look inside this manipulation over here as well. But if it just like doesn't distribute and just steams through all of that, then obviously I'll be looking around this higher time frame 50 or 80. But the writings on the wall, I'm pretty like, it just makes sense to see this thing keep going lower. We're seeing, US dollar, the data soften across the board. Like there's not really a whole lot of demand for the dollar right now. From a fundamentals perspective, and I like how we obviously invalidated this last reaccumulation as well. So in terms of zones where we could be looking for shorts from, just delete some of this and clean this up a bit. Don't move the text down. Some chart hygiene going on. Right, so we've got 50. Let's delete some of this stuff, make it look nice and pretty. All right, so we've got our break here. Make this a little bit prettier. Cool. So we've obviously broken that. So we want to see now, obviously, this is our leg, we're in discount, right? I'm automatically assuming this is going to be an accumulation. I will get to the chat one sec. Let me finish the XY and then we'll go to the chat. But I'm automatically assuming this is an accumulation. Could this sell off and do that? It could. I don't care. All right. I'm in discount, so I know buyers live in discount. All right. I don't want to sell from discount. If you're going to sell a house, would you rather sell your house at 10? You can't sell a house for $10. Would you rather sell your house for 100K or would you rather sell it for 200K or 300K or 400K? Of course, right? So for me, I'm not going to be looking in here, right? Because we're in discount. If anything, I'll let this thing accumulate, give me some strength. And now it's, are we going to come up into our reload? Let's make this a little bit cleaner. Are we going to come into our reload? Our last redistribution that caused the break? All right. Or are we going to come back into the distro? Either way is my like supply line in the sand is here. So as long as I don't break this high, I'm still going to be bearish on this. In terms of like, we could see, some sort of like Monday fake out, Tuesday price comes in, everyone gets bullish. And then obviously during the data tomorrow, if data comes out bearish, that will just be the catalyst to short it. So I don't really want to do a whole lot here. So for me, there's only two scenarios. It's either this turns into an accumulation to come up to at least the 50% of this redistrib, right? At least that. And then give me a lower time frame schematic in here. I mean, you could set limits in there, to be fair, but we have to see what EU says and the risk to reward. But waiting for those distros to then send it lower. Now, if she doesn't have enough strength to come up to at least these 50s, then I'll basically wait for that accum, wait for the shakeout, and I'll just set an alert on that low, and then wait for the redistro, and then play into the redistro. Does that make sense, guys? Let's go for the chat and see if you guys got any questions on this. The CPI uptick in the chart proving the UTAT is blowing my mind. Yeah, it's crazy, isn't it, man? Like I think how many people got faked out on the last CPI data, right? Year over year came bearish, right? Month over month came bullish. So on the short term, we did have that spike. Everyone was like buying, but wait a minute, we're still in a distribution. We're still in phase B, right? Phase A, climax, so all-mat reaction, secondary test, MSAL. That was our upthrust. Remember, news is just the excuse, right? It was the excuse to shake all those people out, entice everyone in long. And then what did we see? We saw the weakness. And then now we've obviously got the break. So as long as we keep seeing inflation down trend, then we should stay bearish on this thing. Yeah. Is it possible to strengthen the dollar and provide economic growth for the stock market? It's possible, but I kind of find it doesn't really happen that way. Like they're not exactly correlated, but just from like a money flow perspective, right? Where does that money come from? You know, like think about it. If the stock market's going up, how can what is the stock market measured in? It's measured in dollars, right? Pretty much. So if the stock market's going up, it's because money's pumping into it, right? What's the stock market made out of? Businesses, right? So people are like obviously buying into the businesses, buying their products, the businesses performing, so that money is going from someone's bank account into the companies, into the stock market, which is obviously driving up the value of the prices. So it's flowing out of the US dollar and into the stocks. So is it possible? Sure. I wouldn't say they're exactly 100% correlated, like something like EU and GU or something like that, but most of the time I tend to find that's the case. But obviously just let like the individual market cycle in the chart you're looking at basically like confirm your opinion and just create those if-then scenarios. Like if you're ever at a time where you're seeing, for example, like a bullish dollar and a bullish stock market, I would still be happy to buy the stock market just because remember, like when you look at indices, like long term, how they're actually designed, like you got to remember what they are, right? If you're looking at US 30, you're looking at top 30 stocks, stock. Okay, Kieran, you can English. Top 30 stocks in America, right? If you're looking at the NASDAQ, right? You're looking at the top 100 tech stocks in America. You're looking at what's the other one? SPX, right? Looking at top 500 stocks in America. Like a really big nugget on this is because it's a list, right? And this is something you need to remember. Because it's a list of these stocks, if one company starts to really underperform and really fall off the wagon, they'll just delist it off that stock exchange and they'll take it off the list. So when you look at like these indices long term over 5 years, 10 years, 20 years, like they only ever go up, you know? And typically you'll see those crashes in the stock market around when you see the economic cycle switch into risk off, which obviously would rally the dollar. So let me know if that answers your question, bro, or you want me to go in a different way. So where we've broken the previous reaccum, does that give us cause and effect? Yeah, 100%. Yeah, so like we can set limits off this. You know, we can. Now, the question is it worth it? And obviously this is DXY. I can't trade DXY. So we need to look at EU. So before I open the EU, is everyone happy with these charts? Hi, Happy. Nice to meet you. Any questions about dollar before we get into it? Well, define booth. If it's a price is breaking a high or low, I don't really care about that. But a price is breaking a schematic, yeah, that's cause and effect. I sent dollar into the chat. Also, whilst I'm here, let me quickly send these articles. And I'll also send a link to the live stream of the Bloomberg TV thing. This is powerful. Cool. Back to the chat.
Kieran, can I ask a quick question, please?
Yes.
So do you know why I just asked? So is every booth cause and effect? And you said only if it breaks a schematic, then it is. But isn't this a low in itself? So
it's a reaccumulation. The low of what? This so when I say I don't care about highs and lows, right? It's because of the effort that goes into it. So like for example, we know that like on Euro USD specifically, it costs $1 billion to move the market 1 pip, right? So
Yeah.
dollar is going to be somewhat similar. So if let's just say, for example, we look at a single high and low like that. Let's just say if it was at risk, maybe in total in this candlestick is maybe like 50 to 100 pips of moves.
Yeah.
Is that the same? Like, what do you think costs more money to, and who would be more intentional behind it? Someone who spent maybe 50 to 100 billion, or think of how many moves has gone into here. Like they shorted it here, rallied it here, shorted it here, rallied it here, shorted it. Like there's so many moves in here. So because of the amount of effort and the amount of money spent and the intention behind that, That's why I care about, and this is now cause and effect, because they had to spend time, effort, and money to create that reaccumulation rather than a single high. So it's a low, you're right, but of what? It's a low of a reaccumulation. You know, like if it's a single low, like for example, if price does that and breaks that low, I couldn't care less. You know, if price does that and breaks that, I don't care less. So when you're looking at like highs and lows, it's the high and low of what? You know, it's like, for example, in here, if price sweeps these highs, do I care? No, because the high and low of what? You know, I'm phase C of a schematic at that point. So I'm expecting manipulation. But if I've now seen, okay, a distribution and a redistribution form, so they've had to go in, spend all that time, effort, energy, and money. Because remember the 3 M's, right? Means, motive, and money. Who has the physical means to actually facilitate that much money? Institutions. Who has the means to create those schematics? Institutions. Who has the money to create that? Institutions, right? Who has the motivation to create that? Institutions. So what I'm trying to say is like, it's all about the effort that's gone behind it, the law of effort and result, right? So if I've seen a distribution come in a redistribution form where they've basically spent how long? 30 days of price action creating, well, let's say, what, like 15 days, or 15 days, creating those schematics, filling those sell orders to invalidate demand. This shows me that there's not a lot of buyers in here anymore. There's no buyers in here because of the effort. If they did all this, price come into here, accumulated and did that, oh yeah, I'm extremely bullish at that point. But like, because this is a reaccumulation, which again, they spent time. How long was this reaccumulation took? You know, this took 16 days. There's a lot of money that was spent in there. So me seeing that, okay, they've created a distribution, created a redistribution to invalidate these buyers, shows me there's no more buyers in there, which gives me extra confidence that sellers are in control of this market. Why? From the fundamental perspective. And then 2, from the effort and result that's gone into it. The effort of creating these schematics, creating those schematics and invalidate those buyers. So that's why I care about that. Whereas if, for example, like, let's say, like price breaks one of these single lows in here, that's just order flow, right? That's just the highs and lows. I don't really care about them breaking, because what is the significance of that high and low? Is that, now, here's the caveat, right? If I'm in a distribution, right, and I've got like a UTAD and it breaks the low that created the UTAD, well, the significance of that was my sign of weakness. Compared to if I'm in phase A of a schematic and it breaks that, I couldn't care less. That's a change of character to do that, because there's not a lot of effort behind that. I don't know how many people are supporting that, are backing that movement behind that. I want to see the physical manifestation of a schematic so that I can see there's people in control of that market and there's organization. There's intention behind that price action, rather than price just doing that. Like, I don't really care about that. Like, that's where I'll just zoom out, bigger picture. Where are we? What are we doing? What's the significance of that?
See, because also on your SPX trade, I noticed on that video you said you set a limit on that reaccumulation, and you said there was cause and effect. So I was a bit like, oh, we've never sort of left limits on, unless I'm mistaken, on a reaccumulation.
So I guess it depends how you want to look at it. I guess this is the only thing that could be subjective, but like, where was it? It was back here, right? So where's the markup one? All right. So, all right. How do we create a reaccumulation? We created a what? Do we have a distribution here?
Yeah.
Yeah, right. Do we have an accumulation?
Yeah.
Okay, let me ask you a question. Number 1, what did the distribution do?
It just sold us. It was profit taking, move us back down to discount.
100%. And what else can you tell me about the accumulation?
Broke the distro.
Yeah. So again, you're same thing on all indices, right? You can apply the same logic. But what I'm saying is, regardless of all of these, as long as you're seeing like that accumulation as cause and effect, and the risk to reward's worth it, you can throw limits on those 80s if you want. You know,
Sort of similar what we've got here, like, oh,
not my bad.
sort of like this. Yeah. There's a distro there. I guess you could argue there's a cube down the next reaccumulation.
Yeah, yeah, technically you can. All right, technically you can, yeah. But now this comes into probabilities, right? Now, what I liked about this one is that we didn't have any resting liquidity below. We had clear accumulation, clear like manipulations. Whereas here now I've got a bit of liquidity here, almost double bottom. Could I set a limit in here? I could. You're right. I actually could. Do I want to set a limit in there at this point? No, because I'm beginning to be mindful of this liquidity. And you wouldn't be wrong to set a limit. It just comes down to a point of, is it worth it at that exact point in time? And like, obviously when you're doing that, you know, it's all about risk management. So when I say risk management, it's like, okay, so we have cause and effect, so we can throw 0.25%, right? But I'm not just going to throw 0.25% at a 50 and an 80, because now I'm over leveraged, because that's now 0.5 risk. So it's going to be that 0.25%. I'm basically saying I'm betting that on the fact that this is a reaccumulation. So I'll use that to split up across entries. So personally, what I did, you know, 0.125, split it, and then I'd say the number 0.125 if I could get the micro, and I just didn't get filled on the micro or anything I found that was clean. And like the reason I split up like this is because number one, in cases like this, where sometimes she will trigger you off this larger one and just not give you anything clean in a lower time frame. And it's like, in that case, I'm still in, and I'm still getting something, and it's still a valid entry. But if it loses and just goes straight through, I haven't lost enough that I'm super upset about, because I'm still waiting for the schematic, if that makes sense.
Cheers for that, man. Thank you.
Yeah. Yeah. And like I quite like the amount of effort and the risk reward as well, bro. Like it has to be worth it. You know, like now if this was a 1 to 5, oh no, I wouldn't have done that. But the fact it's like a 1 to 20, I forget the exact risk reward now, but it's like a 1 to 22 or something like that. What was it? Yeah, well, 1 to 25, my bad. In that case, that was worth the risk, you know? Yeah. Does that clear it up for you, bro?
Yes, good. Cheers for that. Thanks, Will.
Of course, anyone else, if you want to unmute anytime, you're more than welcome. Let me hit the chat. So, trade the fact up rumors. Yes, sir. So basically the chat, bro, that you found the link, like the one I just sent messages in, I'll send the recording in there. Just give it like maybe an hour or so after the meeting and it will be sent. Cool. So back to DX1. Yeah, contract switches. Can you explain liquidity? So liquidity is essentially basically like just there's two ways of looking at it. You got the way that's easy to understand, and then the real way why it actually works. So the way that makes it easy to understand is just think about it like, okay, why do most people lose? Most people lose because they trade in obvious ways. So for example, if you have like a single high and low, there'll be resting liquidity above that, because how do most people trade? They'll put their stop losses maybe 5 pips above the high, 10 pips above the high, 20 pips above the high, right? Or you see like a support and resistance zone, like a double top or a double bottom or a triple top, right? Most people put their stop losses above the highs, below the lows. So this generates pools of liquidity where orders are sitting. So for example, if we're in a distribution, right, and we've now had, let's actually pull up the schematic. Okay, I have to dig from the computer. 1 sec. Where are we? Moment. Okay, let's take it back up. All right, there we go. So, like if we go to our distribution, for example, right? Liquidity is like areas where orders are sitting. So, for example, if you see here, think of how many people, right? So, oh my God, break a structure, lower high, lower low, right? Third touch of the trend line. People are selling, putting their stop losses here. So, if you're selling, right, and you hit stop loss, so you aim to sell on MetaTrader 4, let's just say for 10 lots, right? You hit stop loss. The way you close that trade is you have to buy back your order from the market. That's why you lose that dollar amount on your account. So if you, for example, risk $100 and you in your stop loss and you lose on the sell, you're essentially buying that order back. But you're buying it back, right? But someone's on the other side of that trade. Who's on the other side of that trade? The bigger players, the bigger institutions that are facilitating those transactions. So liquidity is just areas where orders are resting. Now, truth be told, institutions are not sitting there gunning for John's 10 lots, right? They couldn't care less about John's 10 lots or even 100 lots or even 1,000 lots. That's not a lot of money in the grand scheme of things. You know, to us it is, but to an institution, you know, who's dealing, you know, like JP Morgan, who's dealing almost 10% of a $7 trillion a day market, like it's not that big of a deal, right? So liquidity is essentially just areas where weak hands are being shaken out of the market, right? People who are early, like early sellers, you know, people then who, for example, are getting caught on the buy, right? Okay, we're bullish, let's start buying. Anyone who's not taking profit eventually gets smacked out, right? So it's basically just like liquidity is, you know, like areas, highs and lows in the market, support and resistance levels, double tops, triple tops, trend lines, right? These are areas of liquidity. And what you'll find is that price doesn't always have to take it, but most of the time it will. So for example, if you see here, before the real, or even anywhere, right? Before the real move occurs, we have what? Liquidity, right? We've got double top, stop losses are above those highs. We've got a little trend line as well. So everyone who's selling here gets manipulated out. Everyone lost. They're giving their orders, the weak hands who are losing and getting shaken out. Because remember, institutions don't use stop losses. They don't need to use stop losses because they trade so much contract. They have so much money. All right. I have to find the article to show you. Let me see if I can find it quick. Bank losing trading days. If I can find this. They barely have any losing days. Here we go. Look at this. All right. Goldman Sachs, 236 profitable trading days and only 15 days of losses. All right. The reason why they do this is because, like, remember when we do mitigations, they buy to sell. They can hold those orders that are in drawdown open for ages and ages and ages and ages. And sometimes they have to create liquidity like trend lines, the double top support and resistance, so they can allow their real orders to get filled. So these bigger players, like they're trading so much money, they have so much money, and they can move the market wherever they want. That's why they don't take barely any losses, because they can physically move the market, and they do move the market. And that's why we see those schematics print, because that's the footprint of how they move the market. You know, so like, you know, to really like simplify it, you're looking for manipulations, right? Where is an area that price has built up liquidity, where it's built up highs and lows, right? Trend lines, double tops, you know, like you just see it just gets these just trend line, this double top gets absolutely smashed, and then the real move occurs. You know, we've got more trend line, get smashed, more trend lines, more liquidity, getting smashed, getting smashed. So essentially, when it comes to liquidity, you can use it as targets, and you can use it for areas to wait for manipulations. If you haven't seen that liquidity, the highs, the lows, like been ran, and prices traded above it before reversing and giving you, like, in terms of your schematic, hasn't given you, like, you're looking for the UTADs, you're looking for the springs, right? You're looking for those. If you don't see them, you're not trading them. All right, that's one of the biggest things, manipulations of liquidity. Cool. I've got that, bro. So let's move on to EU. So EU is pretty much the opposite of dollar index. So I don't really need to do my top down on this. Now I just need to clear this chart up. So where are we? Zoom out, clean this thing up. So, all right. So in terms of dollar, so dollar broke this. So this was the redistro. The dollar broke. Now, remember, EU, guys, is the inverse of DXY, literally the exact opposite. So we broke that. Have divergence. So this is what we mean by liquidity. But this is, like, getting a little bit advanced when you have correlating assets. Is actually dollar gave the manipulation. So in this case, it's not really true liquidity because dollar already gave the manipulation. So like with correlating assets, sometimes, like for example, DXY can give the manipulation, and sometimes EU can give the manipulation. So in this case, because DXY gave the manipulation and EU is the opposite of that, for me, this is going to be my reload, and obviously this is going to be my extreme. But when I look at EU, I pretty much base it off of what dollar is doing. Like I couldn't really care less what EU is doing. But on EU, we're in premium now, so I'm not going to be buying up here. All right, I'm waiting for this to be a distribution. Let's see the volume. We've got any absorption up here. Yeah, we got a fucking shit ton of absorption. This is probably going to distribute. Now, if it reaccumulates and shoots higher, I couldn't care less. I'm not going to buy up here. I'm going to wait for price to, the same thing on dollar, right? Either distribute, come down in here to send it, or to come down in here to send it. If it doesn't do that and it just kind of does something like this and reaccumulates and it gives a distro, gives the accum, I'll play into that. But it's probably play later for the week. So I'm just going to set some alerts around, where's my alert? 1.08500 essentially. The EU for the first area. Yeah. Double check that divergence. What was the date? 1st of March. Yeah, you see what you see here? You see how dollar gave this manipulation and EU doesn't? And even if I just flip EU upside down, it's literally the same as dollar. It's literally the exact same. All right. So we've got divergence in there. So because dollar has given the manipulation, like I don't necessarily need EU to give it. Nothing else. I'm not really going to consider all that. Again, you can see all this liquidity, all these like clean lows, double bottoms, Amarin premium. So yeah. So again, like, does everyone understand why I'm assuming this is a distribution? Okay. Just because where it is. Because it's premium in the leg, we've just broken a new distro. We're in a premium. I'm going to be waiting for that distro and automatically assuming it. If it goes higher, I couldn't kill us. All right. I'm assuming that's to be a distribution because of where it is. Distributions happen in premium, accumulations happen in discount. So yeah, I mean, could we set limits off this? Oh, maybe not. Look at Frankfurt, sweet. Let's check Oanda real quick. Futures. See if it gave the manipulation. Let's see. Euro futures give the manipulation. It didn't. It was DXY that did. Okay, that's fine. Where's it gone? We wouldn't sell it with that for now. But this micro down here looks juicy. Let's see. Dylan, are you here? Are you still holding the GU buys? I am. Ooh, that's clean after 50. 122. Ooh. And then Devil's Advocate zones. Yeah, that looks pretty clean. I mean, let's see if we offset it. What's the difference? 1 to 30. It's not that big of a deal. Ooh, 1 to 50 after 80, man, that's clean. 1 to 60 even, damn. But obviously, remember, when you like refine it this much, there's a less chance of being filled. In this case, I'd probably rather just go after 50 and get filled off the 1 to 23. That's still clean. And then wait to see if we get the micro. Let's see if we now obviously we don't have like on EU we don't have manipulation, but because dollar we do. I'm not too concerned about this liquidity because dollar's really swept it. Let's see. Where is that in the whole leg? Oh, sweet heavens. The 50 of the whole thing lines up with 50 of this. I like it. 1 not bad. Okay, the 80 is juicy though. The 80 is the 1 to 32. These would be valid as long as CPI comes out lower than previous. Obviously, if CPI changes, then that would change this. Why is it twisting and turning? Whoa. There we go. Yeah. And obviously for these on currencies, these would only be valid between 7 a.m. UK time and 7 p.m. UK time. I'm probably not going to set limit now. Can we consider it as a cum? What part, bro? This? Yeah, this is sure. This is the cum of a micro. This is 10. That. What is it? I mean, I don't really. We can try to validate it, but before I even like for me, there's no even point even going down on a lower time frame because number one, just from where it is, we have reason to go lower. Number two, effort and result, right? You know, why would I like? And think of it. Let me think of it. Giving you an example. Let's say you've got two fighters, right? You're gonna bet on. We had UFC the weekend on this weekend. Who saw UFC? That was fucking sick. Shout out Sean man. But right, we've got two fighters, right? Fighter one, he's got a he's got a 2-fight track record. He trains once a day. Fighter over here, he trains 2 times a day, 3 times a day. He's got a 100-fight track record. Who are you gonna bet on? Bet on this guy all day long. Oh, bro, that was disgusting. I don't know how he didn't get knocked out after catching him. That's fucking insane. But yeah, so yeah, effort and result. That's what we're looking at here. Effort and result, right? Like the amount of the size into this and the fact that dollar manipulated it, I like it. Because here technically it's just a bunch of liquidity. Now, in terms of market cycle, like is it a lower time frame reaccum? Let's validate it. Technically it is. But I don't really like the fact that we've got all this rest in liquidity and it's in premium. It just goes down to the pros and cons, you know? Like, let's weigh it up, right? Pros and cons. Okay. Is it pro trend? Pros, cons. Is it with a trend? 100%. Is it a reaccumulation? Yeah. Is it in alignment with fundamentals? Yep. Cons. It has rest in liquidity. It's in premium. And we've got a much, much juicier reaccumulation to come lower. So can we come lower? Yes. So at this point, it's like, okay, the cons are starting to line up with the pros, so I don't want to take it straight. I don't have an edge. You know? Think about the FOMC meeting. Okay. Well, I mean, it's in premium, right? So if this turns into a distribution, all right, I'm probably expecting something like that at the very least. I mean, let's see what this looks like on DXY. That's it on DXY. No manipulation, so we don't even care about that. Like my eyes just look at the size of it, man. It's like again, risk to reward, right? Would you rather take a 1 to 2 risk reward or a 1 to 20 risk reward? I'd rather take that, just from the size of it. There's more effort involved with that. Like if I take a short out of that, my journal is going to tell me 1, bro, you're in discount. Number 2, bro, what the fuck are you doing? Why are you even low time frame there? Look at the size of that. Focus on this. It's like, I'm not going to use that, but yeah, cool. I hope that makes sense. Any questions about that? Or I mean, could it react? Sure. I like that's the thing. I don't really care if that's going to react. I'd rather let it distribute, let it accumulate, and then play the reaccumulate role. There's always 2 scenarios. You either distribute to come down to your discounted demand zones and take your entry on your lower time frame, or you distribute to shake out to reaccumulate. Because because again, if it's going to redistribute, right, it's going to give an accumulation, probably pretty poor. But I don't want to take an unnecessary loss here, and then a valid loss here to then take that. Like, there's no point. I'd rather just, if this is going to lose, I'd rather take that loss and then catch this one. You know what I mean? Considering like there's liquidity, there's no shakeout, dollar looks disgusting there. I mean, could it mitigate out of there? Could. I don't really care about that. But what even caused this manipulation? There's not even a manipulation really, but what even caused it? This was 7th of March, not 1:15. UK time, 7th of March. Unemployment claims. I don't really care about that. I mean, I've got this massive one down here. AU, it looks like dollar starting to drive this thing. I mean, same thing. China's economy is still in shambles. We can do another top down on this. Dollars, I mean, yeah, China's still in shambles. Obviously, why am I talking about China? Right. Okay, let me ask you guys. So, Australian dollar, what does it correlate with? What currency does it correlate with? Entity, right? Cool. Why do they correlate? Why, and what do they correlate with? What influences the value of these currencies? China, right? So these are basically companies. These are countries that rely heavily on exports, right? So they make things and whatever they do, agriculture, millions of different stuff. I couldn't tell you those specific details, but long story short, they export. Who is their biggest trade partner? China. That's it, right? China. So when the Chinese economy is pretty shit, think about it. If China doesn't have money, can they afford to import products from Australia and New Zealand? Because remember, if Australia and New Zealand are getting exporting loads of things and sending goods out to China, that's going to boost them. But if the Chinese economy is doing shit, mind my language, then how are they going to have money to buy stuff off these guys? They don't. That's why we've been seeing the ridiculous sell-off. You know, from a technical standpoint, you know, redistro, we come into the 80 of it. All right. We distributed out of it. All right, we had another redistro. Another redistro. So daily to see it's a bit cleaner. We then, what did we do? We then just broke a singular high. I don't really care too much about that. So could this be given permission to come up into this? Sure, it could. Let's have a look. So what do? We come in after 80, we accumulated out of here. But remember, we're still maintaining our leg from here. All right, we still maintain our bearish leg from here. And a minor boost, which could give permission. Then ultimately, you had a redistro here. Price has failed to break. Ugh, this is an ugly currency, mate. And like even like the central banks from these guys, they're hedging in right now. That's why you're seeing so much conflicting signals. Right? You're seeing signs of sellers, signs of buyers. All right, because they're hedging in. Taking both sides. All right, now what I want to do is check NU and see where we are with NU from a top-down perspective. So same thing. Come into that. We distroed, we redistroed. Hold up, this chart's getting a bit ugly. Clean this, clean this. So we redistroed over here. We then broke, technically got some liquidity here that we swept. Broke this minor order flow, which could be giving us permission to come back into supply up here. But the question is, are we seeing signs of buyers come in? So we've had an accumulator. I mean, this is just ugly price action, man. This is just hedging in. We've got redistro here. It's really ugly. We've got an accum. This will probably be something I'm not going to trade until we see some signs of China being bullish. I did see an article earlier about China. What was they saying? Oh, what was it? Yeah, China. I mean, comments. Yeah, I don't really like this. It's probably not going to trade these pairs. This is in the middle of nowhere, man. Like this, we're just doing nothing. Like, what has this done this year? It's literally done nothing. Is there anything? 4 hour. Split these both up. Oops. And like you remember, as traders, you know, it's not our job to. Oh, what the fuck? Look at that. Okay, let's just do it like this. Remember, it's not our job to always look for reasons to trade. Sometimes it's best to look for reasons not to trade and practice capital preservation. Not being in a trade is probably the best trade you can be in. All right, so AU, what have we done? AU's mitigated this redistro. NU has done what? Mitigated the redistro and boofed as well. Okay. Okay. Seeing this accumulation couldn't do anything. It just traded into supply, and now we've seen some sellers come in. Anything I would lean more to the. Okay, so AU's lagging, NU's leading. It's probably not a whole lot I want to really do with this. I mean, the safest play is really to wait for that. I mean, we are in. Let's see. I mean, it could definitely come lower down here. Play a micro. I mean, like something like this, I'm probably not going to give a lot of priority on because I'm just seeing signals for buyers and signals for sellers. I probably don't want to do a lot on this. Yeah, I really don't like these. Yeah, here's let it confirm the redistro. Really? Yeah, I think that's the best thing. These are gonna go all the way down here. I mean, there's not really a lot I want to do with these, to be honest. GA, let's see what GA is doing. So where are we on these higher time frames? Let's clean these up. Coming to demand from here. Pound futures is pretty bullish. Let's see. So market cycle, accum. Supply lives up here. So I'm doing that, just plotting up where buyers and sellers live. Okay, 80 the distro. Let's take a look. Oh, what on NU and AU? On this. I mean, it's claim manipulation. I think just because like we don't have a clean supply. Wait, do we have a clean supply to left? Let's see. No, we don't really have it. Wait, where did we come into? I probably wouldn't try to sell this distro because I don't want to pick the top. I'll probably play the continuations. If anything, like let's say what I'm gonna do actually, let me set in case we get the redistro because it looks like we're in a potential active accum, building some liquidity. So if we can maybe see, assuming this is the spring of an accumulation, we do something like that. I'll let it mitigate and then do that. I'd be interested potentially in a very low risk redistro, but this is like the lower. This is bottom of the barrel here. Plop an alert there. Oh yeah, I wouldn't be trying to short that. Try to pick the top because the dollar weakness could be driving this thing right now. It looks like it has been recently, but higher time frame is just a mess. It's very low priority. Back to GA. All right, so where was we on GA? Come on, GA. So, all right, back to the weekly. So we've accumulated. We've then what have we done? So let's see what we did. So we swept liquidity. We traded into demand. We accumulated. We broke a minor redistro. Let's see what this thing is. It's been ages since I looked at this. All right, let's see. What can we find? So we reaccumulated here. We swept liquidity here and here. We've technically got an accumulation here, potentially trying to confirm a reaccum. We've got relative lower time frame market cycle accumulating. It's looking, ugh, this looks like an active distro. This is ugly. Ugh. Ugh. Let me get some sort of manipulation and then sign the strength. I'm not going to trade this for a while. I mean, higher time frame looks like it's an active distro, to be honest. Investigate this from a volume perspective. Let me see the volume and kind of see like who's winning the battle of supply and demand in here. Where is the power of the orders? See, a lot more volume on the sell side. Even from, I'm trying to look at the candles as well. So it looks like a distro, but it just lacks weakness at this point. And I don't have any real manipulation for the buy side. What's GN doing? Ugh. That's worse. Oh yeah, oof, that's disgusting. Big mixed signals, probably just leaving these. Unless we get, I'll probably set alert here if we break this. Because I need like confirm the larger reaccum. This ain't gonna happen today. This is gonna be super low priority. What was you looking at, Nathan? Unless you're seeing something different to me. I mean, I can see that we've had the accum down here. I'm guessing you was looking at something like that, or yeah, there's nothing too clean. I mean, if I had a gun to my head and someone said buy, like look for a trade because I'll kill you, then I'd wait for maybe like that and then that and then that. But from a higher time frame perspective, like if I took a loss in here, my journal would just tell me, bro, you're an active district. So for me, I'm probably gonna sit my hand for that. All right, you chef, what's happening here with you chef? So pause, zoom out. Clean. All right, where are we? High time frame. Ooh, potentially distributing from supply. Okay. Can I validate this? That's the question. Can I validate this? We've got some absorption on the climax. A little bit of volume divergence, how we're kind of seeing volume go lower as prices going higher, which is showing there's less interest for price at higher prices. But this is currently a type 2 because it only has one manipulation. But let's look at this. All right, so where's my change of character? Let's see. All right, so put a micro in there. And of course, if you guys have charts you want to send, like, and you want to share your perspective on these pairs, I'm always happy to look at it and look at another perspective. Okay, so we got our first change of character because we got a larger pullback than our prior pullbacks. Okay, OneDrive. So we've got a climax to automatic rally to a secondary test to an MSAL. One drive, we've got a second drive. We could see the type. We could see that. This really depends on what dollar's doing. Oh yeah, we'll get into G in a sec. Where's this pen gone? Right. It's not the cleanest distro. Wouldn't prefer the drives a bit bigger, really. I'm going to be open that we can do that, so I'm not willing to set any limits off this. No way. We could easily turn this into a type 1, and I'd love that, because that would really validate this. My bad. Zoom, this little like annotation thing's moving. All right, there we go. Let's see. So I'll look in here. What's the volume saying? I mean, there's not going to be any limits of this. But if it distributes, or have an alert at, well, let's just say 88,300, 0.88,300. We can look in there, but I'm gonna be mindful that if you wait for micro, distro, be careful, it could create larger. So 1. Cool. Does everyone get that? Or it could do that. Oh no, where's my things on? Yeah, gotcha. All right. Yeah. Oh man, Gala is pumping, boys. Like I've got to check it, and someone put in the chat the other day. It was like 8 cents. I was like, "Wow!" It was crazy. Gala Music has some potential as well. I need to buy some of that. Cool. Put this here. Cool. So, oh, no, I didn't put my alert there. 88,300. You got yourself a bit. Oh, you cheeky guy. GJ. All right, we spoke about Japanese yen earlier. What is going on? So, right. If the BOJ come out and start raising rates, this is going to be a fuck off distribution. But this is all tentative based on the BOJ. So right now, technically, I still have negative rates. I'm still going to look for the bullish bias because technically rates are still bullish. Rates are still causing us to be bullish. Yeah. If you missed that, we did that right at the start of the call. And we went quite in depth. Cool. So okay, so we've got this reaccum here. Okay. In terms of market cycle, this is our most recent reaccum. But it's got a little bit of liquidity under it. Let's see. Did that sweep? No, it didn't. Still got. So I'm gonna be mindful of this and it could come down to there. What do we do? So you guys see why I wasn't trying to buy it out of this? If in the chats. Remember someone was looking at trying to buy that? And I was like, no. This could be a larger accum at this point. All right, so didn't that, oh, wait a minute. Oh, you guys see what I'm seeing? Oh, 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 maybe. Just maybe. Right, so that is pretty much my plan for GJ. So I want to see if this is going to accumulate. Where's my pen? There we go. All right, let me just set a little line on this. Don't want that to break. So you come back to the 50, then sweep it. I'll look for a micro up on that, and then ideally do that. That's what I want to see for GJ. So we've got 1 drive, 2 drive. Give me a 3rd drive. Now, if this doesn't transpire on GJ, now again, this bias literally will change. I'll literally throw out every buy on GJ, AJ, NJ, whatever, if the BOJ switch their monetary policy and start raising rates. Like, I'll look for shorts. Now, if this sweeps, it doesn't confirm the accum, and I'll look into here. Assuming interest rates stay negative, bias switches to bearish if they raise rates. Yeah, it could be, bro. It could be. All right. GJ looks cool. UCAD. What are you doing, UCAD? Zoom out on this thing. Well, just give me the UCAD. All right. So, all right, let's clean some of this up. This is getting way too ugly. And another tip, like from a few other, I would say like at least once a month, just redo your charts, to get a fresh perspective and redo your top downs. Because sometimes like if you're like, obviously, yes, you can do a top down on the weekend and then throughout the week, you don't need to do another top down because you've already done it. But it's good at least once a month to refresh and start again. Right here, this is technically bullish. Let's clean up some of this mess. All right, cool. So what we've done, we've come in, we've accumulated, we've invalidated this redistro, but we couldn't quite break that. But we are still technically bullish on this thing. What do? We come back into the accum. We've accumulated out of here, so technically we're in a bullish market cycle. All right, but what I'm kind of starting to notice on this, let me just delete all this shit. Go away. All right, what I'm starting to notice. All right, could this be our shakeout? No, this could be a distro, But the only thing I'm thinking, it makes more sense this is a reaccumulation because technically, because technically this is driven by Canadian dollar, unless the dollar starts driving this. But so what have we done? So this isn't a bit of a range. But so we've got a distro. So now this is an active distro. But I'm in a bullish market cycle. So can we technically got a little manipulation, but I'd rather something like that and that. Can you go over the importance of the 5-year, 10-year, 15 and 20-year bond yields? Yeah, so like when people invest in the DXY, they're not buying the dollar. Investors are not buying dollars, they're buying bonds, right? A bond is like a government-backed security it's like an investment you can buy and you'll get a yield on that investment, right? The yields are going to be correlated to interest rates. So when interest rates rise, you get a better yield on your bonds. So for example, you can buy a 5-year bond, a 10-year bond, a 2-year bond, a 15-year bond, which will give you a return on investment at the yield. So if the yield is at like 5% because interest rates are around that, investors find, oh, that's quite attractive because interest rates are going higher, yields are going higher. It's more attractive to get and put our money into a safe haven, like one of these bonds, rather than put it into a risk asset like stocks or cryptos, etc. So when you're in that risk on environment, money will flow out of the bond market. And why will it flow out of the bond market? It will flow out of the bond market because you're seeing interest rates being priced in at being cut, and you're seeing inflation fall. Cool. So I want to see a bit more of this shakeout. I mean, I'm open for the hedge on this. If gives micro can hedge. Um, 10-year bond. Well, think about it. What's the auction? They're selling them. They're auctioning off the bonds. Well, bonds is what drives the dollar. So look at the bonds. Understand what's going on with the bonds. You understand what's going on with the dollar. You understand what's going on with the dollar. You understand what to do with dollar pairs. Yeah, I'm gonna look if it gives a distro in here. Around like 1354, but ideally I like the REQ. Man, this is probably one of the longest trades I've held now on NCAD back from March. It's been going, bro. I still want to swing this thing down here, and I will swing it. I'm gonna hold this until it fucking comes on it. All right, let's see. So we come in here, we distribute it, we broke the market cycle, clean this up, distributed. Don't like this accumulated in there. At this point, it's just got to redistribute, man. It's really just got to redistribute. What's ACAD doing? Oh, my spidey senses are tingling. Oh, hello, Thailand. Okay, all right. So, let me observe what's going on here. So, who's leading? Who's lagging? Looking at correlated assets. Let's see if ACAD can distribute it. I mean, we've got to change the character, it looks like. We're to 50. But there's not a whole lot I want to really do. We've got a larger pullback. Oh, volume spike, boys. Absorption. Wait, what happened? Did that spike lower first? Or okay, it spiked higher, then drop. It's the bottom of my range. Okay. So I'm just gonna set an alert here. And then once that alert goes off, I want to see if I've got my free drops. I've got one, I want to do like two, free, sweet, break, bing, bong, bang. All right. Yeah, that's ACAP. Can you show us your trading view settings and watch list settings for what? What do you mean? Settings for what? Watch list settings. So what do you mean settings? How I do it? I mean, there isn't really a settings for watch list. I just kind of split up in terms of like priorities. So I'll have like, so basically the easiest way to look at it, and I'm going to go over and do more organization after this call. Like the easiest way to do it is to have 3 main watch lists. So you have one watch list, which is like, I have no fucking clue what it's doing, and it's low priority, right? It's maybe ranging, like there's nothing clear. You have your second watch list, which is I've identified a POI. So for example, right, you found a reaccumulation, right? And you're waiting for it to come back. So you've set an alert and you're waiting. This gets a bit more priority. Then your third watch list is your highest priority, is when she's in your POI and she's now printing a schematic. So it gets the most priority. In terms of trading view settings, you're gonna have to tell me what specifically, my bro. Because there's a lot. Where am I setting my ACAD alert? I'm just gonna set it above this high. So it looks like we've got our trading range set. Well, it's still phase A. And remember, you only know phase A is completed once phase B is completed. You only know phase B is completed once phase C is completed, right? You only know phase C is completed once phase D is completed. So I need the whole schematic to validate. Obviously, I'm not taking an entry yet. So I'm just going to set an alert on this high if I get some sort of manipulation. But this is going to be a bit more on a priority list because it's in my POI. And if I start seeing like maybe redistributions and something clean, I could start shorting it down. But for now, I want to see if it distributes. Like I'm like, when I say play a redistro, like I'm not gonna like if it does that, I'm not playing at that. No. All right, I'll let that happen. Then I'll play into the redistro if it gives on. But ideally, I want it to give the full on distribution. Do you move those pairs around all the time? 100%, bro. Right? It all depends on like what I'm seeing, right? Again, the criteria is number one, do I know what the pair's doing for the first watch list? Like if I like, for example, let's say something that's like EG, for example, right? Euro GBP. All right, it's just fucking. If we open the shop, where is it? Now, if I catch anyone trading Euro GBP, we're gonna have problems. Right? What has EG done in the last year? Well, my bad. In the last year, nothing. Where are we? In the middle of nowhere. All right, doing nothing. But got demand here, got supply here. Just ugly as fuck. All right, and wait until that low breaks and until that quickly. So it sounds like this is my low priority because it's doing nothing. There's nothing clean. I'm seeing buy signals, sell signals. So this is the low priority. I don't want to look at this. I'm not going to look at this. Right? What am I going to do and look at this for? It's ugly. So like I don't know what's going on. And it's okay, right? Sometimes you look at currencies and it's okay to not know what you're looking at. Doesn't mean you're a bad trader. That means you're a fucking good trader because you've got the discernment to say, I don't like this. I'm not trading it. Versus an amateur will say, oh, I don't like this. My alpha mindset has been triggered. I must dominate this market and control it and look for a trade. And then he gets smacked. So the first watch list is, I don't know what you're doing. And like, I don't like you. My second watch list is, okay, I've seen a POI. I've seen a reaccumulation, maybe a distribution. Like I've seen some sort of supply or demand, and I'm waiting for price to return to that zone. And then the third watch list is, okay, it's in my zone. I'm now waiting for that lower time frame schematic. And so the first watch list, I don't know, bro, that gets no priority. I will not be checking that. Maybe a few times a month, I'll scan it. In terms of day-to-day, like these will be the highest priorities. And now you can create sub-watch lists like, okay, right, out of these POIs, I've identified how close is it to coming to fruition. You know, like you can organize it like that. Okay, this one is 50 pips away, this one's 100 pips away, this one's 200 pips away, this one's 300 pips away. This will get the most priority, second, third, and fourth. And obviously, when she's in your zone, what time frame schematic are you looking for? If I'm looking for a seconds time frame schematic, that is the highest priority because it's going to happen the soonest, right? If I'm looking at a 15-minute schematic, bro, that's going to take a few days or maybe a week or two to build. So that's going to get less priority, you know? Another man's trash and another man's gold. Let's see. All right, so back to the list. So U share, where was we? ACAD and NCAD. So I was quite like ACAD. What's NCAD doing at this point? Don't like that accumulation. But we had the ugly distro in here. Yeah, I'm not gonna do a lot on NCAD, to be honest. ACAD will be the focus. And as long like I just want to see NCAD continue to show weakness to support the distro. So like if I see this falling off whilst ACAD is distributing, perfect. Ideally, what I'd want to see is NCAD drop and be the leader, whilst ACAD sweeps and goes higher and gives a UTAD. And if that's the case, and we see NCAD breaking demand, and ACAD hasn't, and I can see a micro up here, I'll short it without the break. All right, but it all depends on if we are seeing that scenario. Oh, I just got to see the time. All right, let's hurry this up. So main focus will be ACAD this week. GU. GU. Oh, sheesh. We are booming, boys. We are booming. What are we at? Oh my God, these entries down here are flying. All right, fuck me. I ain't even looked at that account. Oh my God, I'm still in these ones as well. I need to open MT4. You're probably thinking, what do you mean accounts? I have different accounts, like accounts like these are swing trades. So these are a complete separate account to my day trades. So we've technically confirmed the reaccum. I'm gonna be mindful, of course, we could see something like that. But I'm gonna trade what I see. And dollar is driving this. So I pretty much, if you remember what we spoke about earlier, right? We've got the reaccum that broke that, and we've got this ugly accum that broke that. Realistically, on GU, I see it coming into here. Obviously, I'm not here to predict it, but if she comes into here, I'll tell you what I'm going to do. We'll probably set a limit. What was the R&R? The 80. Oh, yeah. I'll set a limit of the 80. I set number 11 when she comes closer. Yeah, I like the 80% of this micro Frankfurt sweep from the NFP. What's the 50? Not bad. So 1 to 12. If we offset it, 1 to 18. What's 1 to 28? I quite like that. All right, there we go. Split risk on limit and micro. Make sure DXY does not invalidate supply and shows sign of weakness. Because this is my reaccum. It has cause and effect. So that's what I'll set limit on it. All right, so that's GU. Cool. So alerts, I'm gonna have one at 1.26800 and another one. So yeah, 1.26800. If she accumulates around like 1.26500, yeah. Then I'll look for accumulations here as well. Yeah. Anyone got any questions or see anything differently for GU? Indicators, not really, bro. Like, I'll use RSI for divergence sometimes, but it's not a must. Like, it's just another pro and con. You can take the screenshots, but like, I don't really care too much about that. I have my Asia indicator. So if you go to the indicator store and type in best best Asia range indicator. You'll see it. And then the settings are as follows. Like obviously this will be recorded, so I'll just print screen it now. I'll take a photo with your phone. Obviously you have the recording, so basically everything's unchecked apart from Asia range, which is 8 p.m. to 2 a.m. Eastern. And volume, which is just standard. Just changed the colors and made it black. I have these kill zones, which is a script, which I'll just send here. This is just like London, New York session, basically. I'll put that here in the Zoom chat. All you do is just come down to the Pine editor, paste all that in, and then apply it to the chart. I'll drop that in the general chat in the conversation one. And then sometimes I'll use volume profile. That's just to try to build confluence, but like that's not like a set rule. I barely check it, to be honest with you. This is just a weekend, Saturday and Sunday for our back test and do end of week markups. Start to focus just on 1 week of price action. But like, yeah, that's it, really. All right, so that's GU. Gold and silver. Oh my God, silver. Like silver, buying physical gold bars is a great long-term investment. Higher time frame. Oh man, I remember buying this shit in COVID. Oh, this was so sexy. All right, so obviously we've got a massive accumulation coming for that liquidity. Probably going to be at $60 an ounce in a couple of years. We've mitigated the reaccum. We've accumulated out of it. Oh my God. Right, she's just going, isn't she? All right, really come into you. Right, there we go. Come into here. I'm just gonna speed up a little bit because we've been here a while. In terms of lower time frames, this is an active distro. It's looking like. Why is that a distro? Because it's premium. Got liquidity. Maybe if we can get some sort of shakeout and do that, we could play a reaccum. Now, this is if she doesn't come down to demand. What's Goldilocks doing? Goldilocks, man. Bro, I still can't remember the last time I traded this thing. When was it? December. Took a loss. All right, so we microed in here. This was so beautiful, man, but I don't think it gave an entry unless I missed it. No, it didn't. She never mitigated. Well, that's a textbook accum right there. Just never mitigated to 50. So still buying gold, but there's just nowhere for me to get in. Wait, hold up. This is getting ugly now. Let's clean this bad boy up. So again, sometimes like chart hygiene, boys and girls, you just got to clear up the charts. This way it's good to redo your top downs. Not every day, but at least a couple times a month. If she's gonna come down there, I mean, the only other scenario is distro and reaccum. That's pretty much it. And give Pretty much it. Like that's pretty much it. Like every time you look at a chart, that's it. That's all you're doing. You're just identifying a schematic, set an alert, or waiting if it basically gives the reaccumulate or redistribute. Oh, you said, I see you are using Oanda and FXCM for charting. Just wondering which more is reliable. Futures. Futures is the most reliable, but I'll cross-reference, bro. I would say if I had to say who was more reliable, probably be Oanda because they're more regulated, but just cross-reference, bro. And like if you can, like I'll look at multiple charts of the same currency. So like if you see me send a chart, right, like on gold or silver, that's not my be all and end all, right? I'll be looking at the futures market too. I'll be comparing across Oanda, across FXCM as well, because sometimes you get different data, right? Like, I think someone was asking this in the chat earlier, right? Like even with indices, all indices specifically only use futures. The futures market is the most accurate. If it some like don't have a futures market, but if they do have futures available, use the futures charts. I think on TradingView there's normally a delay with the futures markets unless you upgrade. But like the futures is always the most reliable because that's like straight off the, normally the CME, it's straight off the trading floors. Whereas like sometimes there can be discrepancies. Like if we look on indices, well, we'll get to that. Okay, let's do it. If we go on indices, right, look, if we look on NASDAQ, right, it's 17,966. But on futures is 18,230. That is a huge discrepancy. It's like a $300 discrepancy. And if you look on other NASDAQ, right, brokers, we go on FXCM, right, it is 17,969. You look on Blackball, it is 17,960. Okay, same. All right, but you look on Forex.com, and that's all moving the same. It's so quick. But long story short, let's use futures because there's a lot of discrepancies, but then cross-reference as well. Yeah, so it's like another add-on you gotta buy. It's TradingView is a suck, bro. But with TradingView, like if you have any subscription, like if you just threaten to cancel them and it's going to cancel, they'll give you 60% coupon. Or you can wait for Black Friday and you get 60% off. Personally, I just wait for Black Friday and then just buy a Black Friday. But if you just like buy 1 month subscription or something, like just pay like 20 quid, then if you threaten to cancel, they'll normally give you a fat discount. But for indices, there's a pack you have to buy. I forget exactly how to access it. It's just like when you open it, it will say delayed. Press the delayed button and it will open the window to pay it. It's not too much. I think it's like £70 a year, something like that. That's true. What Albert said, if you buy it on Black Friday, your subscription will begin on Black Friday. All right. EJ, hello. All right. Accumulate for me, baby. Again, this is the same thing as if BOJ switch monetary policy, look for sales. Until then, wait for Q. They give you 30 months. Cheeky. I think, don't quote me on this, but I think with TradingView, if you buy it, it will like add on, if that makes sense. Like if you've got 30 days and you buy another year on Black Friday, I think it will give you like, if that makes sense, it will add on. But don't quote me on that. You have to double check. What are we doing here? So time frame is this schematic. Hourly. Albert, if I recommend watching the start of the recording when it drops, but basically the Bank of Japan's monetary policy, they have negative interest rates, which is devaluing Japanese yen, which causes XXX JPY pairs to go higher. And like, there's a lot of talks right now. If you read the articles we sent, there's a lot of talks that Japanese yen could, like the Bank of Japan could change their monetary policy to raise interest rates, which would mean that XXX JPY pairs go lower. But right now it's just speculation. Let's see this. Could this be a 1 drive, a 2 drive? My thing is like, why would they have all that absorption? Just collapse. I probably don't. Realistically, if this does confirm a sign of strength, I probably want to see it break that, then play some sort of continuation on this. Have we seen absorption? We are a little bit. I don't like we don't see absorption down there though. Technically, it's a type 1. But I don't like how we just redistributed. I want to see some cause and effect on this. Like, realistically, if you wait for this break, you can, but where are we? To the left. Are we coming to the 50? Oh, we haven't come to the 50 yet. Yeah, fuck that. I would need to see that. I need to see this give cause and effect and break that and give a trend change. It's a major strength. It's a major spelling, bro. It's a major spelling. Spelling. Oh, God. There we go. All right. Like that. Mhm. GCAD. Oh, we never got the short. So she's just turned into a big really cute. Again, I don't like this supply. This is going to be a distro. It need to get major weakness at this point, which is going to take a while to form. Broke the high. Let's see if we can trade back. Oh, hello, treacle. There you go. That confidence with the 50 and the 80. Hello, son. All right. Put that down here. Okay. All right. Something like this on the GCAD. So let me, where are these alerts? All right, you remove. Let me put one at the 50 and see what she does. Right, we'll get to UJ in a sec, and then we'll get into indices and see if we've got any indices scalps for today. And then we will, because we still got 45 minutes until New York Stock Exchange open. Hello. Hello. Oh, how nice of you to join us, UJ. The only thing, the BOJ did put a policy in place. I need to clean this up, bro. And the BOJ's policy said, don't want UJ around 150. We're not reaching 150 for long. Can we close anything above 150? We haven't closed anything above 150. In the 3-month. And a monthly we did. Oh, we technically swept this liquidity. Trade into demand. We then accumulated out of demand. We then right. Now we need to go check futures. Bro. So we've had some ugly accum into the reaccum into the distro. And then what have we done? Technically trade into here. Hello. Hello, hello, hello. So, okay. All right, looks like we're in phase B. Oh, the absorption is clean. So we've got sense climate automatic reaction. Are we seeing some drives? This is going to be the same thing with all the BOJ stuff. Let's see. So as long as BOJ remains negative interest rates, we will look for buys. Yeah, you're right. What was you looking at, bro? For UJ. Okay, so price came into this redistrict here. He saw a type 4. There's a lot of organization behind that. Where are we in a higher time frame? Let me send UJ in. CAD chef. I mean, yeah, I'm looking at the same thing. This was just saying I was trying to backtest. Could do, because it is technically in the reload. It is technically in the reload. The only thing is we are in a lot of discount. What was you looking for? I kind of saw it as more of a micro and just kind of following the market cycle. This isn't a position I'm looking to take at this point. I want to see it if we can confirm this redistrib at this point. So if we can do that, oh, game time. Like that. If we can confirm the redistrib, Yeah. You was looking for what was you trying to do with it? I mean, yeah, this is to reload. You're right. I'm just gonna be mindful that in case it turns to a reaccum, you know. That's why I want to wait for that's why I want to wait for this break because of higher time frame. We are in discount, right? So I want to be mindful that this isn't going to turn into a reaccum because this technically could be the shakeout. So I don't just want to because it's in so much discount, I just want to be super aggressive in here. I want to wait for that, and then if so, I'll short it. Wait for the confirmation. Good job, bro. Yeah. Let's wait for the confirmation. So set the alarm on that. All right, we missed end chef. And chef needs to show some weakness. I'm not seeing a lot of weakness on this stuff. What's A chef doing? So technically, she did distribute. I don't like how we attempted to distribute here. We've reaccumulated, but we did come up into there. So, what was this 31st of Jan? 31st of Jan. Where is that? Okay, so we broke that low on NCHEF. So I'm not too concerned that this is a break. Let's see what we can see here. The buyers live here for sure. As long as we don't touch that. Did you buy a mini meme coin? Nope. I'm good. I don't gamble. I'd rather go to a casino and throw 10 grand on black than buy a meme coin. Better odds that way. It's like, you got to realize a lot of these meme coins, right? 99% of them are rug pulls. Most of them have high sell tax, and most of them have liquidity issues. So you physically won't be able to short because there won't be enough liquidity. Some of them have a lot of high sell tax, and because there's no use case in there, it's just gambling, man. There's no reason for people to put money in it. Like for me, I'd rather have a consistent, steady portfolio over time with projects that are backed by real life use cases and have real reasons into it, which will make my equity curve do that, rather than just buying 10 meme coins, fucking 9 of them lose, and 1 of them could moon. When in reality, they're all probably going to fucking lose. I, I have I forget what I have. I think I have the Ledger S. I don't know if there's too much of a difference. This doesn't look bad though. Excuse me. All right. Do I see myself limiting off this? Where are we? Oh, this did break. Is it already reacted off the 50 of the whole thing? Let's see. Let's see what we can see. It's Monday though. Did mitigate that. Oh, and the 50 entry's gone. The only thing is the risk rewards are the juiciest. To the devil's advocate. It could easily come to that 80 though. Let's see. Wait, my fib's not aligned. Not bad off the 80. Mm, did she? So she broke. Did she break the low first? So this low is set at 57995. Wait, what? 57995. 57993. So it did technically break and mitigate the 50. So now A chef is leading, N chef is lagging. I'd rather get into N chef. It doesn't look too bad. Yeah, obviously I'll be mindful in case it accumulates in there, but it doesn't look too bad. A UJ. What else is frequently gonna happen? ACAD, NCAD. GU, not today. EJ, I'll monitor, but be there. I think that's everything pretty much, boys, apart from indices. We'll go for indices. Indices give a lot more frequent plays. But yeah, I'm happy to see if we can get a limit off end share. That's good. Let me set this limit. I don't think it's a Monday though, so a little bit lighter risk. Spread right now. And chef. Okay, half a pip. That's all right. All right. Cool. All right, let's see indices. Crypto, what are you doing? Oh yeah, we're gonna keep pumping for another year at least. Man, it was so funny, man. I remember sitting down here after the FTX collapse, just buying cryptos, and everyone's like, "No, sell it, sell it." We should. We. Oh, I do want to see a crash soon. Though, I'll tell you that. Maybe when ETH creates a new all-time high, we'll get a crash. Um, who's performing well today? Fucking hell, Near's up 20%. Avi's up 10%. Bro, this shit has gone crazy, bro. This shit's like 60x since like the end, like no, obviously November, December last year was the buy time. So even like started December, bro, shit's flying. Next is up 13% today. This has got some growth. I mean, even from where we are now, I mean, prior highs still at 4x, but this will probably clear them. Celt looks like it's picking. Oh, Celt spiked yesterday. Feel that wick. This thing I went to hit 1/10. Gala, we made a nice pump. Yeah, this could 10x easily from here. EGLD, a bit more expensive, but this is probably quite an easy 10x. Maybe towards a 15, 20x, I reckon. Say it. R J. All right, let's check indices. Right, where are we at? US 30. All right, let's clear some of this. I wouldn't be surprised if we got something like that soon. I'm gonna be mindful that could occur on a higher time frame. So move all the drawings for a second, just get a clear picture of price action. The only thing is now I'm starting to lack manipulation. This is starting to make me think like we haven't had a proper shakeout in a minute. We've been mitigating and mitigating and mitigating. So I'm not going to set any limits off these. Pet's been busting last week. Yeah, bro. They were crazy. But I'm going to show you what I see. And I will have a look for some micros in here. And then literally this is pretty much it, boys. After we go through this, same thing. Unless you guys have anything you want to look at. But I'm gonna go grab some food. I'm starving. So this is gonna be really come down to that reload, mate. Damn, we've been there a while. U30. You oh no, that's not futures. Oh, here you almost got caught out there. U30. Yeah, I'm gonna be mindful that we could see the shakeout soon, so it's the same sort of thing. I need micros now. Oops. Let me just do that. There we go. Cool. Yeah, that's pretty much it. I mean, I will look. Let's see if we can get a scalp for the open. So who's leading today? Right, Naz is leading today. U30 is lagging. So let me see. Uh, it's Monday, man. It's super early in the week. I mean, let's see what these do. No manipulation. No manipulation. Yeah, probably just sit on hands day today, boys. Get ready for the week. I mean, I'll come back at the open and see if I can get some sort of shakeout, but and maybe look for a small scalp to the downside, but sweat Asia highs this morning. Oh, we already mitigated a 50. I mean, maybe if she wants to come back to the 80. I mean, 1 to 6, not the best. Probably wait, see if it gives a micro, but it's early in the week, man. I don't want to be too keen. Yeah, there's no manipulation here. A little bit of manipulation here going on, but what do we do? So we confirmed our distro here, distro there. So now we're technically in discount of this leg. So technically, this is a 1 drive, 2 drive. Technically, this is an accum. So let me do that. Confirm a re-distro and see if we can get a little scalp. Yeah, let's sweep all that. Like, why am I looking at this as a potential accumulation? Just because where it is, man. Like, this is the leg. All right. I mean, discount. So, maybe 1 drive, 2 drive, 3 drive, spring break. Shakeout, then play the redistro. If that happens at the open, yeah, I'm in for the short. If the open gives a fat shakeout sign a week, that's pretty much like what I've drawn here. And the 80 limit looks clean. I could probably go for a limit off that. But we'll have to see how we transpire. This is U30. YM is U30. ES is S&P. And then NAS is NQ. In that case, I'll look at NAS. I'm probably not going to set a limit off that. Let's see. Let's see what we do by the open. We've got the open in 20 minutes. So I'm probably going to go grab some food and peep the open to see what we do if we get a whole lot of manipulation. If I like, and then from there, I'll probably just set some alerts and then walk away because it's a Monday, it's early in the week. I'm just going to keep it nice and chill on a Monday. Yeah. And we'll be looking especially down here at this accum. But yeah, that's pretty much all for me, boys. Unless we have anything else on the radar. Anyone have anything? GN? What do you have on GN? Besides trading, what other sources of income? A few things, bro. Stake cryptos, mining cryptos. I have obviously a trading business, properties. Yeah. How many mentors do I have for what? I have mentors for everything. Depends what I want to learn. Yeah, but like what? Define trading. There's 4 different skills in trading, right? You got technicals, you got psychology, like pretty much, like so how I kind of go for that with mentors is I'll find one person who's got the main result I want, and I'll start listening to them. And then from them, I'll start picking up like loads of different, like they'll tell me different topics, they'll tell me different things to start studying. And then I'll start figuring out like who do they listen to. And I'll start branching off and exploring that topic and find out who's credible in that area. So yeah, bro. A few, man. I've been doing this game since 2016 when I got started. And I've had a shit ton of mentors, bro. I've had mentors that are fucking trading on demo. I've had mentors who are trading on the New York Stock Exchange. So yeah, a few, bro. But in terms of like technical analysis and a baseline, well, the thing is, it was all pretty much surrounding Wyckoff. In terms of the way I'm trading now, I found like obviously I told you guys before, that one person pretty much emulated him, and then from there, obviously I found those little different. Like a lot of this way I've traded now, like someone hasn't taught me it. It's come from just journaling and experience. Like a lot of people are always seeking stuff that's outside rather than spending time looking at within. Like my biggest mentor is my journal. That's the most important mentor, and my own experiences. Like nothing else will come close to your own journal. Like people are spending time watching YouTube videos, watching all these courses and stuff. Like, don't get me wrong, it's good to like depends on where you're at in your journey. But this is the thing: where are you at in your journey? If you're at a point where you don't have a trading plan, you don't have a good understanding of fundamentals, you haven't got a good understanding of psychology, you need mentors in those areas, But if you're at a point where you've been doing this like for a while, all right, and you still feel like, oh, I'm not where I want to be, at that point, your journal should be your mentors should be your journal. But again, it all depends on where you are. And you're going to go through different phases in your journey. So there's not like a blanket statement for this, bro. It's all a little bit subjective to where you are in your journey. Like someone coming in, for example, who's never opened a chart in their life, they need to find one person, stick to them, and copy their strategy. If you've got someone who, like, again, there's a million different reasons. It's very hard to say that for each person. But for myself, I found one person and emulated the results. I emulated them. They obviously, and then from them, like once I found, okay, right, oh, I need to start learning these things, and I started branching out. I started at IM Academy too, bro. Oh, what? Bro, deleted his message. Yeah, I started at IM Academy as well. Shout out to them. I mean, didn't get me far, but shout out to them. But yeah. So obviously, boys, Monday, we're not going to do a market outlook, but what I'm going to do, might be able to do it at the airport. We'll see. Actually, no, fuck that. What we'll do, we'll do it on Sunday. So on Sunday, we'll do the market outlook. I'm probably not going to be trading too much next week. So I'm flying to England and like seeing my family, and obviously I'm gonna be jet lagged like crazy. And so I may not be too active, but I will do a market outlook on Sunday. Yeah, same time. Perhaps maybe we'll do more like a Q&A team training, and like chart reviews. But I will still look at like future charts to get you guys ready for the week. But it'll just because again, how I manage myself and my own trading, my life comes first. So if I know I'm going to be busy, I'm going to be traveling countries, bro, you're not going to see me fucking in an airplane trying to execute a trade in MT4. Like, it's not real. Like I'll trade, then travel. But like, obviously on Sunday, same time as today, we'll do another call and take it from there. Bring back your journals this time. Yeah. Sheesh, what ones, bro? Have you ever done that before? Once I set a limit, and this is so again, this is you have to know like preparation, man. It wasn't like I was sitting in the airport and I saw a trade there and then. No. It was like again, every trading decision I make comes from preparation from days and weeks and maybe even months ago. You know, it's all about organization. But there's been times where, yeah, like I've had a limit set and I've been on an airplane and landed and I paid for my whole flight. Yeah, sure, that's happened. But like, if I know I'm going to be busy and like physically doing stuff in real life, I'm not going to be actively trying to hunt for a trade. Also going to be mindful that this could do that as well. But yeah, going back to the question we mentioned, like journals and your own data is the biggest experience. But of course, it is a little bit subjective to where you're at and where you are in your journey. The best thing, like the best advice I can give you is don't go down the route of being a personal development junkie. That was one thing I did at my start and it really fucked me up because like I was that person, I'll jump from so many different mentors and I wouldn't spend time mastering one thing. Like I would read 20 books, but then someone would ask me, all right, what's on page 12? So you're better off finding one person, one thing, and redoing that again and again and again. Oh, but Kieran, I've watched the video. Oh, but Kieran, I've read the book. Okay, what happens in minute 16? Oh, it's, you know what I mean? So you're better off getting one book, reading it 20 times. You'll learn more from reading one book 20 times than you'll learn from reading 20 books one time each. It's not like sometimes it's not about getting new information. Sometimes it's about completing and mastering the basics. All right. Kevin Trudeau speaks a lot about that. But like a lot of times about mastering the basics, man. Like when you like, bro, there's audio. Like for example, I'll send the audio in the chat, bro. I guarantee you I've listened to those. Like "Oh Nightingale, Stranger Secret." Like I could, bro, I've listened to that way over 100 times. I can pretty much recite it word for word. But guess what? Every time I listen to it, it's like I'm learning something new. You know, so it's like trying to fall into the personal development junkie mindset where you're like always trying to learn something new, always trying to buy something else, or like sometimes it's better just to get one thing and just stick with one thing and repeat it again and again and again and again and again. Yeah. Like don't do it until you get it right, do it until you can't get it wrong. Bro, I use your journal. My losses are adding money to my equity. Hey, well done. You beat the system. No, you just got to put what what you said, you got to put a negative sign. So like if you have a loss of $100, just do negative $100, bro. And it should do it. Yeah, there you go. But that's it, man. Yeah, Kevin Trudeau is a guy. But yeah, that's the thing. Like a lot of people just get caught up in so many different things. They jump in. Like I promise you now, right? In trading, there's no golden strategy out there. Every fucking strategy works. The reason why it doesn't work for people is because they don't give it enough time. They're not doing it right. Like if you stick to this strategy and you tell yourself, I'm going to stick to this strategy for 5 years. All right. Now, why am I saying 5 years and not 5 months? Because if you're going to quit after 5 months, trading is not for you. Right? People go to be a doctor for 7 years before they get their medical license. Trading is the only industry that people can come in and think, oh, I'm going to be a full-time trader in a week. Bro, it's a profession. It takes time. But regardless, like if you have this strategy, think in sample sizes. Take 20 trades, go and review your 20 trades. What did I do right? What did I do wrong? If you have 20 trades and you have 15 losses, look at what happened to your losses. Okay, I had 15 losses. Okay, 15 losses out of them. What's the biggest commonality? All right, I had 10 losses during Asian session. Cool. I'm now going to take 20 more trades. I'm just going to change one thing. In that case, I'm not trading Asia session. Now I'll take 20 more trades and compare the data. If the new sample size gives you a better result, you're onto something. If it doesn't give you a better result, go back to what worked before and slowly tweak it. Slowly tweak it. Like the biggest mistake I made in my journey was not spending enough time in my journal. And I was being a personal development junkie, reading all the millions of books, millions of audios, blah, 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 blah. But then the real breakthroughs came when I stopped seeking all this new shit and looking at the shiny object syndrome, because the grass isn't greener on the other side. The grass is greener where you water it. So the biggest change came for me when I stuck to this one strategy. Because, bro, I've traded every fucking strategy. You can name it. Bro, from harmonics to fucking support and resistance to Elliott waves. Bro, like to GAN, bro, like every Forex strategy, break and retest, teacups, fucking DeLorean, IML scanners, bullshit. I've tried it all. A lot of the scanners are bullshit, I'll be honest with you. But the key is sticking to one strategy and diving into your journal. Like the keys, what made me stick to Wyckoff was honestly, bro, well, firstly, real like, so when I met the, so long story, but I'm gonna give it too short because I need to shoot in a minute. Basically, when I found out that the way the algorithm actually runs on the CME trading floor is very similar to Wyckoff, and the fact that Wyckoff has been around for almost 200 years and every other strategy is just trying to interpret Wyckoff in another way, made me realize that this is it. So yeah. And for me, it just made sense because it was logical. And I'm quite a logical person, or I like to think I'm logical. You know, maybe I'm not, who knows? But like for me, it just made sense, you know, understanding the changing of hands, understanding the laws of effort and result, cause and effect. Like it just made sense to me. And then then when I saw it on the chart, like I just couldn't unsee it. You know, and it made sense because the whole reason I wanted to trade, you know, was not to be one of those, oh, I'll buy Lambos and act like an idiot, was to have freedom to do what I want to do when I want to do it. You know, being able to like I'm okay to wait for, like, you know, I'm happy to wait a week for a trade and then catch a 1 to 20 versus being that guy who's catching 1 to 2s all day long. Like, you know what I mean? I'd rather spend a few hours a week on the charts, catch a banger, rather than like scalping the market all day for small, like, you know, things. But yeah, for me, it just made sense to me, bro. And the fact that it's like one of the most tried and tested strategies. Yeah. Teacups, oh mate, you don't want to know what teacups are, bro. It's just, bro, like it's just pattern trading rubbish. But yeah, the biggest advice I'll give every single one of you guys before we call it a day is this. There's no golden strategy out there. There's no golden edge. You are the golden strategy and you are the golden edge. You need to have a positive mental attitude, right? Combined with a sickening work ethic. If you're putting in hard work, right, but you don't have a positive mental attitude, doesn't mean shit, right? Study the 12 laws of the universe. If there's one thing you're going to study the 12 laws of the universe, right? And study Wyckoff. We've got all the materials. You've got everything in front of you, right? Team trainings we do. Don't just watch them once. Go over it. Watch it again and again and again. I promise you'll pick up new stuff every time. Every time, like, spend time in your journal when you're going and taking trades, make decisions, right? If you've got setups, right, that you're looking at and you disagree with my analysis, that's good. Have the discernment. Disagree with me. Make a decision and write down why. Everything you do in life and in trading, write down why. Everything should be principle based and have reasons. Why? Why are you viewing this as a distribution? Why are you viewing this as an accumulation? Why are you setting a limit here? Why are you risking this much? Why? Your why, WHY, your why will help you, right? Will help you. So everything you do, like get a diary, bro. Physically write this stuff down. Amateurs remember things, professionals write it down. Sit down, write down what you're doing, why you're doing it. Start off, okay, today is, Monday the 11th. It's whatever time it is where you are, all right? I'm feeling this way. I'm going on the charts, I'm viewing this like this. I'm taking this trade because of this reasons, and collect data over time, right? Take 20 trades, then go back and review that document. See all the commonalities. Because we're creatures of habit, right? It's a law of human nature that we'll never do something just once. You'll always repeat some habit. So the key is identifying your cycles. Everything in this universe operates like, we're going to go into it now on a quick one, right? Before we go. But everything in like time, right? And life is not linear like this. It's cyclical, right? So you're either going to be evolving in an upward spiral or revolving around the same area and dissolving, getting worse. How you make sure you're evolving is by, number one, studying the laws of the universe, getting access to the right information and the right mental frameworks. From there, make a decision, act on that decision, and reflect on that decision. Don't be focused on outcome so much right now. Be focused on the right process that leads to the right outcome. So if you're trading, right, don't worry about, did this trade win? Is this a repeatable win? Because anyone can get a singular win. Like that's irrelevant. But what if that's one win out of 100 losses? Doesn't mean anything. So we're going to have habits. Study your habits, study your cycles. Why? Write it down. Why are you taking this trade? Why are you looking at this market like that? Okay, you viewed a couple of people in the chat the other day. They were saying that maybe it's okay if they didn't understand it, but they was like, oh, unemployment is going to mean that dollar's bullish. Why? Write that down. Don't just come to conclusions. Talk to yourself. Like, bro, I swear to God, yeah, like, I feel like I'm a crazy person sometimes because I'll sit and talk to myself. I like talk to yourself, have conversations with yourself, let your thoughts flow, and write down these reasons why. Because what will happen is over time, you'll be able to collect data on it. If you've got 20 trades, all right, and you know exactly why and the exact thought process, mental state, and the exact logic and reasons that led to those decisions, and you realize, let's just say you lose all 20 trades, right? That would give a worst case scenario. You can figure out the biggest cause of that loss, and I guarantee you it'll be the same habit you're doing again and again and again. If you just cancel that one thing and create a rule to change one thing at a time, that's how you progress. Success is the progressive realization of a worthy ideal. It's not just one day you wake up and become a millionaire trader. Like, you want to think it's like that, but I promise you it's not. It is day by day making small changes, tiny, tiny changes, and it feels like nothing's changing. And you look back and you realize everything has changed. So every decision you make in these markets, why? You're marking up this zone? Why? Why? Like, imagine, like, every trade I take, I imagine I'm selling it to someone. Imagine you're an investment firm and you've got and your head will get cut off if you cannot fucking sell this guy on the idea of this trade. And what you'll do is when you're selling yourself on the idea of this trade, as you start putting it out loud, you realize, oh, maybe this isn't a good idea. But the problem is, right, it's not that we don't take enough winners. Anyone can spot a winner. It's that we take too many losses. And the reason we take too many losses is because we lack invalidation principles. We lack invalidation principles because we don't study our own habits. Knowledge. The word knowledge means know thyself. You have to know yourself. That's the most important and valuable knowledge. If you can study your habits, study what causes you to make these decisions, what picks you, what is the cause and effect relationships in yourself that cause you to lead you to make decisions, that's all you need right there. Study yourself, study your habits. And obviously, I know everyone's at different stages, but irrespective of your stage, you should all be studying the 12 laws of the universe. I promise you. If you go to this website here, where is it? 12 laws of the universe. I'll send it in this chat here. All right. Click these ones, study these, put these on your walls, bro. See it everywhere, right? And apply these and watch how your world changes. These are laws of the universe, guys. Just like we have a law of gravity. Doesn't matter whether you believe in gravity or not, gravity's there. There's laws that govern our universe that we are in. I promise you, if you study these laws of the universe, combined with thinking in sample sizes, mastering this strategy, asking questions. Why am I so big on asking myself why? Because the quality of the questions you ask determine the quality of the life you live. Talk to yourself, ask yourself better questions. Ask me better questions. Ask people in the chat better questions. Reflect. Pain plus reflection equals progress. Look at what you're doing. If you're having you lost some trades, you blew an account, it's okay, it happens. But it only becomes not okay when you don't reflect on it. You know, that's the biggest thing. The journal is the biggest key. Like, if you just remember a few things from this call, I promise you your life will change if you apply this. Forget the trading, right? This will come. 12 laws of the universe. Master that. That's the real key. The key isn't the charts. The key is you behind the charts because it's you who trades them. Some of us are too addicted to failing, but that's another convo for another day. All right? Study the 12 laws of the universe. You can become a conscious creator of your reality. Start journaling. Journal what? Journal your trades, journal your emotions, journal your mindset. Everything. Your internal dialogue, journal it. How do you journal? There's no right or wrong way, guys. Just pen to paper. Write it down. Start meditating. Now, look, I ain't one of those spiritual gurus that meditates for 20 hours a day. But 5 minutes, bro, you can meditate whilst you walk. Just consciously breathe. Ground yourself to the present moment. Conscious breathing, which is meditation, at every moment you can. Set alarms on your phone, right? Set alarms on your phone every hour to remind you to consciously breathe. Because if you're not consciously breathing, something else is running you. What is running you? Oh, that's another conversation for another day, right? So journal everything, study those laws of the universe. And this is a topic by itself. You could just YouTube this, you could Google this, bro. There is unlimited information on this online, right? Study this and journal everything. Journal your days. Because why? Why am I telling you to do that? Journaling to increase your self-awareness. Because once you increase your self-awareness, you can identify when you're about to make a mistake in the market, and you can stop yourself from making that mistake. And by doing that and reducing the losers we take, we naturally increase our profitability in the market. When you go to the chart, create your if-then scenarios. Then let it happen. Walk away. Every single day, do an end of day markup, end of week markup. At the end of each trading day, go back and look at London, New York session. Was there anything you could have taken that met your criteria? If it was, cool, journal it. Why didn't you take the trade? What happened? Collect data on that. If you keep making the same mistake, you know what you can do differently next time. Right? End of week review. Sit down, write documents. What did I do well this week? Even better if this week. And remember that everything you're currently going through is happening for a reason. It's setting you up for the next level. And this is the final thing. You asked the universe to be a 6, 7, 8-figure trader, right? You know what the universe is going to give you? Or God, whatever you want to believe in. It's going to give you the tests and the lessons to make you strengthen that light within so that you can handle the responsibility of having a 6 and 7 and 8-figure trading account. When I was broke and I would fucking piss away my £400 a month salary because I had no money management skills, was I worthy of having a 100K account, a 400K account, $1 million account? Of course not. I had to become that person who was worthy and could handle that. Then it came into my life. The universe, God, will only give you what you're ready for. And if you feel like you're stuck and you feel like you're in the same situation, it's because you're not seeing the lesson. You're not seeing the lesson because you haven't developed the self-awareness, because you haven't done the journaling on the right things. If you are, and you feel like you're not seeing progress, there's 2 reasons for that. Either you're doing it wrong or you haven't done it enough. How do you know if you're doing it wrong? Speak to someone who's got the results you want. I'm here. My DMs are open. If I haven't replied to you, DM me again. Don't be afraid. And if you're doing it right, you've got to do it for enough period of time. Oh, we've been here a while. Almost 3 hours, boys. All right. So we know the game plan across the currencies for the week. We've got our mindset solid, right? We're here. We're doing this together, right? Anyone needs me? I'll be in the chats. I've got you, bro. And I'll be in the chats. We've got our game plans. We'll see it. We've had the open. We're not really getting too much manipulation. We'll see. Probably be a sit on the hands day today, boys. Hey, I'm glad you got value. But yeah, love every single one of you guys. It's probably gonna take a while to upload this recording, but I'll do it as soon as you can. You know how it does throughout the week. Obviously I'll see you guys in the chats. Next call will be on Sunday. If anyone has got any topic requests, anyone's got anything like for team trainings they want to go through, like, again, don't be afraid. We'll do it Sunday, same time, brother. I'll put it in the channel a little bit closer to the time. Yeah, 12 UK time, 7 Thailand time, but it'll always be recorded, bro. I'm thinking to do more, like to do an Outlook, but then do something called chart check, where we basically, like, everyone just sends me charts and I review it for you, like wins, losses, back tests, Q&As, and we can just like go ham on that. Or of course, if anyone has specific team trainings, I can create one. Just let me know what you guys want to do. I'm here to help and I'm here to serve you guys. So with that being said, I'll see you guys at the top, from the top. Hey, because you already know, man, that bottom's too crowded. Catch you guys in a bit.